And lastly, I'd look for signals like where does Michael Saylor get squeezed, right? Where is his max pain level? And that may be that bottom point where he finally gets that point. I mean, in all fairness, people that want Bitcoin and think Bitcoin's going to, $250,000, $500,000, $1 million, you got to get the bigger money in there to create that scenario. So I do think that people, I mean, you can look at it two ways. You can look at, regulation. They're going to know everything about us because, they're going to regulate it and track every transaction and everything like that. Or you can say, hey, listen, I'm an investor. I'm trying to build wealth for my friend, my family, and my future. And therefore I need more participants to get in here, and you need the regulation for that. And check us out. So we have this trend line going back to basically May, and it beautifully tags this line multiple times. And if you look at where Bitcoin currently sits, I mean, it is knocking on this door. Now, basically, you could say it's hit the door 1, 2, 3, 4, 5 days in a row. And I'm in the camp that I think we are going to push through. I think some of the macro developments today, like the Bank of Japan intervening, we saw the dollar yen start to collapse a little bit, the dollar's weakening. That's all positive for maybe getting a breakout in the Bitcoin chart in the near term. The only thing I would say, though, is just keep in mind that within this short-term breakout, we still have a channel, which would be known as a bearish kind of channel. And I want to just show this here, is that you have this pattern, right? So even if we break out above this line, and let's say we rally to 25,000, you're still in this longer sideways choppy range, which to me is still on the bearish side. So overall, if you had to quantify it, it's very near-term bullish, but mid-term still bearish. I still think we have further downside to go. Few things that will, in my opinion, start to form a bottom. Number one, we have to see people really giving up on Bitcoin. And I'm not saying everyone, but you have to see a good chunk. Just like in 2009, people kind of didn't even want to open their brokerage accounts and see the financials, see their portfolios. I mean, it was really this kind of like the blood in the streets type thing. So I think in bear markets, you have to see that as a bottom. I think another combination factor would be if you get to a point where the Fed not only stops hiking, but also starts lowering rates and going towards quantitative easing again. And then I also think there's other signals, right? So you have maybe piercing 10,000 where a lot of stops. I could see a lot of stops being right below or right at 10,000 on Bitcoin. Sure. That flushes out the weak hands. And lastly, I'd look for signals like where does Michael Saylor get squeezed, right? Where is his max pain level? And that may be that bottom point where he finally gets that point. I mean, the last thing I would also mention would be we got to get regulation. All right. And I'm not talking about bad regulation. I think in general, assets anyone investing wants to know the rules of the game. And right now in crypto, no big money's willing to take big stakes because we don't know, right? What's a security? What's a commodity? What are the rules that these so-called securities have to follow? So without knowing that, it just kind of makes it very kind of iffy in terms of putting a lot of money. Like even myself, I invest in Bitcoin. I have small holdings in Bitcoin, but until I know more, I can't put more money at risk because I don't want to see bad regulation come out and then it drops 50% on me or more. So I think there's a whole host of things, but suffice it to say, price should tell us, meaning that if Bitcoin flushes sharply, we get a reversal sort of bottoming tail on heavy volume. It breaks the 10K. There should be some clear signals at that point that we hit a bottom. So definitely in this environment, if you're accumulating it, you got to stick with the best of breed. So Ethereum and Bitcoin, and mainly because number one, the SEC said that Bitcoin at least is a commodity. So it gives us a little bit of a framework to understand what the rules will be for that. Ethereum, again, is just the use cases. There's so much use case for it. There's so much kind of build out on it that I think that's the one. The other ones, there could be a massive winner in there, but you don't want to commit a ton of capital because if you look back 2 years ago or 3 years ago, if you looked at the top 20 coins, it's very few of them are still in that top 20. Look at Litecoin, it's fallen way down the list. I mean, and so you just want to be careful. And I think in bear markets, it's where you need to be the most careful because the good will really rise above the rest. So I'm a huge long-term bull in terms of the use case and the need for something like Bitcoin and even Ethereum. Again, I got interested back in 2011, 2012 in Bitcoin because I saw what the Fed was doing out of the financial crisis. And to me, I couldn't I couldn't understand how it made sense when I was earning money or trying to create a living, how they could just print money out of thin air. And in theory, that makes my money worth less because there's more dollars out there. And so the idea of Bitcoin made so much sense to me back then. I wish I invested a lot more back then, frankly, but of course, you'd play it safe, and I did play it safe, and I traded in and out of it. But the bottom line is I'm a cycles guy. I'm a chart guy, which means I'm a realist that cycles occur. So you have these mega moves, just like the stock market. You had it in crypto, and then you have bear cycles. And so you can be a long-term bull and still expect a 50, 60, 70, 80% correction in Bitcoin. It's just might as well trade around that. I think what's even crazier is that from a crypto perspective, like the big boogeymen in crypto were like, everyone hate the Fed because, crypto's our salvation. And then here we're like, Fed, could you please print some money so the crypto and assets will go up? And the same thing with the dollar. The dollar is going to be worthless, so you got to own Bitcoin. Well, guess what happens? It goes the opposite way as well. So I think it's important to differentiate between your short-term views and your long-term. Like long-term, I'm still very bearish on the dollar. I still think eventually the Fed goes back to what they do best, which is printing us out of recessions or depressions. So I think long-term it makes sense, but in the short term, it makes sense that the dollar strengthened because every other central bank was doing the same thing. And then you could argue that they were doing it even to a bigger extent, like the Bank of Japan. With the addition of Bitcoin futures, you're 100% right. Volatility has come out of it a little bit. And I think that's from more participants, right? You get more participants, you get more institutions involved. So you don't have as wild swings where it's just mom and pops or kids, buying and selling and panicking and pumping and stuff like that. So I think that's a good thing. And that's why I'm really excited that as we get regulation, it's going to bring in more and more big money that, while the crypto community is oftentimes anti-big money, we don't want to get the big banks, the big hedge funds involved. In a weird way, they bring stability, right? They bring, you don't see when the markets drop 10%, all the hedge funds don't dump all their Apple stock, right? Or Apple would crash, so they kind of hold through the craziness while the smaller investor tends to panic and then, chase the runs as well. So I think that's a really good thing. I can't wait till there's a Bitcoin spot ETF. I think that would be even better for the overall market. And I think you just have to get more and more participants to be okay with cryptocurrencies, and then you'll see the stability increase even more. In all fairness, people that want Bitcoin and think Bitcoin's going to, $250,000, $500,000, $1 million, you got to get the bigger money in there to create that scenario. So I do think that people, you can look at it two ways. You can look at, regulation. They're going to know everything about us because, they're going to regulate it and track every transaction and everything like that. Or you can say, hey, listen, I'm an investor. I'm trying to build wealth for my friend, my family, and my future. And therefore, I need more participants to get in here, and you need the regulation for that. And again, even think about like older Americans, right? Even myself, I'm not super old by any stretch, but without FDIC insurance on crypto accounts, there's risks. And especially for older Americans, older people around the world, they click on the wrong link and someone gets in their crypto account and steals all their money. It's gone right now. Like there's no recourse. There's no FDIC insurance. And that's for a lot of people, that's something that will keep them from investing in it. Oh, wow. So I think the miners themselves, and this is what's interesting here, is that you do go through periods in Bitcoin's history. Like I still remember vividly in 2018, when the price of Bitcoin was at like 3,500, 4,000, even up to like 6,000, it was actually a losing proposition to mine. But I think the positive of that, and by the way, yes, those stocks will get hurt, but it's almost like going through a bear market for a company that's publicly traded. They're going to lose money for a couple years, but if they stick with it, the idea, especially behind Bitcoin and the halving, is that eventually it will become profitable to mine again. So the whole goal here would be that they continue on and they keep plowing through, and maybe they're putting a little money aside for the rougher times, and that they can survive and then thrive in the bull markets. Does a little bit, but not enough to sway me from macro and charts, right? So macro and charts are the forefront. And then if the macro and charts align with the seasonality, then heck yeah, that's like an added bonus. This year, I'm not so sure about the seasonality because again, we have to see how the markets react post post the elections, and then where do they end up heading? But I still have us priced in by year end to go down on the S&P 500 to that pre-COVID. I don't necessarily know if it's going to be FDIC insurance per se, but what I do know is that the crypto industry needs something like it. So it could be in a different form. It could be just insurance that is paid for by the exchanges or the brokers, but you have to have that. I know multiple people that have had their SIM cards. In fact, that happened to me. My SIM card was jacked out of my phone without my knowledge. And before you knew it, they got into one of my crypto accounts. Luckily, it was an unfunded one at the time, but I had someone who that happened to, and they took all his Bitcoin and it was done. He lost everything. And so I think people have to realize that risk is out there, that things can happen, and there's no recourse at this point. You don't see that recourse. Now, if the exchanges get hacked, I believe they have insurance for that. But if it's from you personally doing something, clicking the wrong link in an email or whatever it is, it's gone. Versus in a bank account, they will make you whole again. And I think this is important, is that people have to understand that crypto is very new. And so it's basically, crypto reminds me right now of what it's gone through from the 80s with like Jordan Belfort and the pump and dumps going on in the 80s with these micro caps. It's really much the same. And so you think about where the US stock market has come from that in terms of regulating and punishing. And that's where crypto has to come to kind of weed out all this shadiness. Because I mean, think about the bankruptcies we've seen from, all these different things, Terra Luna collapse. There has to be some sort of safeguards put in. And I think one of the things is, and this is going to be key, is that if Bitcoin does break below the recent lows, I bet you there were some companies on the verge when we were down at 17.5, and then we got that bounce and they were like, okay, we're okay. But the question is, if you hit 15 or 12, you're going to see a lot more coming out of the woodwork. So number one, I've been generally long here over the last 1 week period, expecting a relief rally to take us at least into the midterms. And I use the midterms in a weird way, just like, all election cycles, is if, early in the year, oil was at 130. I'm like, it's not staying at 130 going into the midterms. They're going to do whatever they have to do to bring it down. And we saw the strategic oil reserve release, as well as other things. But politically, they got to do that. It's only a small point area of it. But I also think that, if you looked at the dollar yen, I mean, there was major stress, and we saw it even develop in the UK with what the Bank of England had to do, major stress on the global financial system.